Good afternoon, ladies and gentlemen. Welcome to the FCC. Ronnie Chan's just finishing his veggies. He wants to make sure he's getting his vitamin C today. If you're not worrying about the value of your property or the value of your share portfolio today, I hope you did enjoy your lunch as well. My name is Tara Joseph. I'm a journalist with Reuters, and we're delighted to have Ronnie Chan here at the beginning of this year to talk about the property market. So lots coming up, but I think forefront, unless it's one belt, one road on many people's minds today, is actually the Hong Kong property market. It doesn't take much if you're walking around to see empty shops and for lease, for rent signs around. Many people wondering what the value of their property is going to be. Ronnie Chan is obviously very well versed in the property market as the chairman of Hung Lung Group and also its subsidiary Hung Lung Properties. He's also the chairman of the Hong Kong Center of the Asia Society. He's a member of the National Committee on U.S.-China Relations and affiliated with many, many other distinguished global think tanks and also economic think tanks as well. So we're delighted to have him here. Now, our format's going to be slightly different today. It's going to be a bit more conversational, and we will make sure to have plenty of Q&A from the audience and also from our board members here. So, Ronnie, welcome. Thanks very much for being with us. Let's get started. How bad is it? There's a feeling around Hong Kong that the property market could really sink this year if you're reading the headlines and listening to people in real estate.
I'm not trying to avoid your question, but allow me to just say three sentences first. The first one, I thought that I was going to be having a lunch with 30 people. I'm surprised. So my conclusion is that FCC must have good food and must be cheap enough so anyway, that's number one. Number two, I want to just introduce my friend, if I may allow, who's going to come see me this afternoon. It's a good friend of mine who happened to be the dean of the School of Management at Fudan University. So since he's going to come see me afterwards, I said, why don't you come along and have lunch. So welcome Dean Lu Shengwen. And since you did make an advertisement, allow me to make one as well of my own, and that is the Asia Society will host the Deputy Prime Minister of Russia next Monday at 6 p.m. He's in charge of energy, agriculture, high tech, and transportation and communication. So this is an important man, Arkady Djokovic, and he will be speaking at the AFF that morning, the Asia Financial Forum. So you're welcome to sign up if there's still any seats left at the Asia Society at 6 o'clock, okay? Before answering your question, sorry, Tara, I must say that your perspective, if you're a journalist, I know that many of you are not, if you're a journalist and your perspective and mine are diametrically opposed. You are under pressure to write an article for tomorrow. So you have to.
We do live in flats, though.
Yeah, right. Whereas I believe that as a good real estate man, I hope I am a good one, I should ignore all the noise. I have to figure out what is noise and what is useful information. And so I don't look at the short term, basically. I think that I will be a terrible real estate guy if I look at the short term. Real estate, as a business person, not just as an owner, is by definition a long-dated asset. And it takes a long time to get from land to final product. So if I am very short-term about it, most likely I'll be wrong. And so let me say this first, that my perspective and that of many of my journalistic friends, I mean, Keith is a good friend of mine for a long time, and many of you, so my perspectives are very different, okay? I believe that the Hong Kong residential real estate market is the healthiest I've seen in 25 years. Take a historic perspective. Before 1997, the Brits make sure that you drive up the real estate prices to have wealth effect and a sense of prosperity. So it did. The height of the real estate market was June 30th, 1997. The next day, the price began to fall. That's how good the Brits are, by the way. And that height was so ridiculous that, it's totally non-sustainable. Whatever the cause may be, it has to come down. Just so happened that it was Asia financial crisis that hit the next day after Hong Kong's return to our motherland, China. And for whatever it is, it stayed down for a long, long time. It began to recover in 2002, and then the SARS hit in 2003. So it took another year or so for it to begin to recover. And then the government made the biggest mistake, and that is they didn't sell any more land. I understand why they don't sell land between 1997, July 2nd, and 2002, and 2003 because of SARS, and 2004. But after 2005, there's just no reason why they shouldn't sell land. But they chose not to sell. And that's why Hang Lung, my company, did not sell completed apartments. It's as simple as, the sun rises from the east. When there's no supply of land, there's nowhere else for prices to go, for residential prices to go except up. So I just stopped selling them. And by the way, ladies and gentlemen, here's a test, which is probably the single most profitable real estate project ever in the history of Hong Kong. I think at least in the contention is our side. We made 17 billion Hong Kong dollars in that one project alone, thanks to the Hong Kong government. It's not because we are brilliant, because they decided not to sell land. And so, then prices went to heights again because of the lack of land supply. When did Hang Lung begin to sell? When C.Y. Leung became the chief executive. Because I know this guy. This guy is going to manage land supply in a wise and prudent way. He's not going to repeat the mistake of his predecessor. So once he became the chief executive, I told my staff, get ready to sell. Because he's going to supply land, and prices will moderate. That's why now, Tara, you guys are asking, hey, is the real estate prices going to go to hell? Is it going to fall? It will fall, but will it fall any further? I'm of the opinion that for the first time in, 25 years maybe, the residential prices today is as healthy as I've ever seen. And I've been in this business for 30-some years. And the reason is because land supply is finally coming to some normalcy. And so when land supply is healthy, residential real estate prices, the end product, will find its level. You look at the supply statistics versus, say, the number of people getting married, 40,000, 45,000 a year, and it's been pretty steady. And so you match the supply and demand, and then the mainland people that are coming. And by the way, ladies and gentlemen, there's a lot more to come, right? I joke with my wife. I said, I see a lot of young, beautiful, tall Chinese in our apartment unit, next to our apartment unit these days. None of them speak Cantonese, right? So I don't think that prices will fall precipitously. Neither do I see prices rise crazily. So why does Paul Chan still say that we will not what do you call it, to moderate the severe measures, right, used to bring prices down? Frankly, if I were Paul Chan, I'll do the same thing. You don't want to take that risk. And I don't think that you can destroy the residential prices easily. And the government has many, many ways that they can pop it up if they sense that the market is falling too fast than what they'd like. And so I think that the Hong Kong residential market today is very, very healthy. And I think I might be the only stupid jerk in this room that think that way. Everybody else tells me the residential prices are falling. I said, no big deal. But mainland China also, as healthy as ever, which is harder to do and more amazing.
So you're focusing a lot here in terms of supply and a long-term view. But there are a lot of other factors in play. One is U.S. interest rates, which everyone was expected, but now we're seeing a rise in U.S. interest rates. We have this thing called the new normal in China's economy. We have a stock market that hasn't had a very good year, and there's a lot more tremors there. We have a slowdown in mainland China visitors, and we have a retail crisis. Surely that must have some effect on your view, or is that just too short term?
Tara, let me ask you a question. Some of the factors that you mentioned, are they bad for real estate prices in Hong Kong? Or are they good?
Well, I wouldn't want to be a shop owner right now.
Well,
And I'm not sure if I bought a flat in the last 5-10 years, whether I'd want to be putting it on the market right now.
you talk
But
about
I'm a journalist, so.
you talk about the new normal. You talk about the stock market, problem in mainland China. How do you know that not because of those factors, more money will not come to Hong Kong? A lot of people say, wow, the stock market in China is really a gambling, it's a casino, right? Ups and downs, so why not have something more solid? And residential unit in Hong Kong may not be a bad investment, right? But after all, we go there for whatever, periodically, our sons and daughters and this and that. And so, hey, some of the factors that you mentioned, Tara, may actually be good for Hong Kong's residential market. So I would, and then you mentioned about interest rate. I said, I'm sorry, ladies and gentlemen, I tend to offend people, especially my host and hostess. Interest rate, you got to be kidding me. It has been zero basically for so long, and now it's up to 0.5. And you are singing, oh, come on, the world is falling down. Hong Kong residential real estate market is being affected. Come on, I tell friends, I said, you go up fourfold from what it is today. It is still much lower than historic norm. So what's the big deal? You think that American interest rate is going to, hike? I don't think so. It may gradually creep up a little bit, maybe 1 or 2 more ups, I don't know. But, a quarter point each time, what does it do for real estate? Nothing. You're not talking about, it has been at 8.5% and now it's going to 10. Wow, that may be severe. But when it's 0 to 2, and history is what? The mortgage rate may be at 7 or whatever, 8. So what's the big deal?
I can answer that question very easily. At the moment, with a mortgage rate of 2%,
We know who you are, but please introduce
sorry,
yourself.
Tom Holland from Capital Research. With a Hong Kong mortgage rate of 2%, payments on a typical mortgage take up 50% of household income, a typical family in Hong Kong. So if you add an extra 2 percentage points to that, that takes up 100% of your household income.
That's because, right. That's because housing prices has been expensive, as we mentioned, right? The last time I saw Harborside, by the way, it was at 82% profit margin. And it was at something like,
What is the 82%? That's the percentage of.
I sell for $100, 82 cents come into my pocket. Okay, it's not bad. And so prices went to heights, and it is now moderating, right? If you were to say prices may slowly moderate a little bit more, possible. Will it precipitously drop, as I said? No, I don't think so. I may be wrong, it won't be the first time, but I really, really don't think so. And it has been so low for so long that, I just believe that it is a very healthy situation. Compared to 1997, the affordability ratio at that time was horrific. But Hong Kong salary has been growing at what percent for the last 17, 18 years since 1997? Per annum. Average? 5, 6%? 5%, say?
But not the median, maybe.
Okay, I don't know about journalists. I'm sorry. I may be touching something sensitive here, but anyway, every year, we are growing at 4, 5%. By the way, in the last 17, 18 years, while the rest of the world has economic problems, Hong Kong has real salary growth, has real per capita salary growth. Unemployment rate has been decreasing. And it's truly amazing. So with that economic background, even though Hong Kong has always been, or Asia in general has always been a high real estate price place, I don't think that it's going to cause so much pain with the man on the street. And if it is, then unlike Singaporeans, by the way, I used to serve on the board of a bank. Hong Kong people have, even at the worst time, such as 1997, 1999 to 2002, the default rate was very, very low. Singapore, although still, 70, 80% Chinese, their default rate was much higher. Hong Kong people just don't default. I suppose that's the virtue of the Chinese, or the stupidity of the Chinese, depends on your perspective.
So just one more question from me, and then I'll pass it on to my colleagues. You seem pretty unconcerned. It might be those nice fat profit margins that you've seen, but surely there must be some risks. What do you think are the biggest risks to the market here? If it's not interest rates, what is it?
Frankly, there's not a whole lot of things that cause me to lose sleep as far as the Hong Kong residential market is concerned. The world is a very terrible place, as we all know. And if there's a wholesale economic downturn, then Hong Kong obviously will be affected. But mind you, savings rate in mainland China is very, very high. So the wealthy, I'm not talking about the salary man necessarily, there's a lot of business owners in China, and there's a zillion of them, that still have a lot of money that would love to come to Hong Kong. And so I just don't have too many things that cause me to lose sleep, Tara. I sleep very well. The only problem is I haven't slept in my bed for 3 days, so I'm sorry. If I appear a little blunt and I mean slow, you know why. I'm sorry.
I want to ask Keith.
Why don't we talk a little bit more then about the mainland? One of the big American banks put out a forecast last week that they were expecting the renminbi to fall to 7 in the near future, 7.3 within a year. I was talking a couple of days ago with an American who was saying that nobody in the States wanted to put money into China now until they saw it go down. They're waiting, and so he was describing sort of the tension between markets maybe wanting China to get it over with versus China, rather understandably, maybe not wanting to have a devaluation, or if they do, trying to manage it in a stable way. What do you foresee for the RMB, and is the uncertainty about the RMB interfering or delaying foreign investment now in China?
What do I know, Keith, about the RMB?
You're in Beijing all the time. What do you hear?
I mean, my crystal ball is no better or no worse than probably most other people's. And as far as RMB is concerned, the Chinese never wanted to go up too strongly anyway. So now they have a great reason for them to not allow it to go up, perhaps even manage it down a little, right? I know that the concern is there's a lot of competitive devaluations, but let's face it, it has been happening in many parts of the world already anyway. The yen, the EU, the euro, and this and that. So for China, for the currency to come back a little is a reasonable thing. After all, the economy is really down. How much will it come down? I have no idea. Two people I have learned not to trust. I'm sorry. The first one is journalists. The second one is investment bankers. Investment bankers have reason. They need to be selling something. You guys are at least honest.
Thank you.
Those guys have something to sell, right? And if you don't recognize that, you don't deserve to survive in this world. And I heard that now they're going to segregate in America the function of research and sales. It's not a bad thing.
They've said that before.
Yeah, they've said that before. Okay, right. So I never trust investment bankers. They have a lot of facts. They're smart guys. Just like journalists, they're smart guys. They have a lot of facts. So I always listen to the facts. But their conclusion, oftentimes, I do take them with a huge grain of salt. And so whatever how do you know that bank is not mucking around in the currency themselves, right?
Okay.
Are you sure that the China wall works?
But at a time when you've got a lot of Chinese families now trying to get their money out of China, partly because they foresee the value of their RMB declining in dollars, at a time when they're rushing to buy houses in Vancouver or Sydney or wherever, does that begin to take some of the froth off the mainland market? Does it make it harder for the mainland market to recover from the supply, the oversupply that we see in some Chinese cities, for example, as people wait to figure out where the RMB is going?
I don't think the house that they buy in Vancouver or Hong Kong or Sydney is fungible with their own house in mainland China. The house in mainland China is mainly for their own residence, whereas out here it's really more dispensable, right? Be it Vancouver, Sydney, or Hong Kong, or wherever. And so I don't think that, the fact that they are buying outside means that they will not buy inside or vice versa. So I think that the mainland real estate market, the residential real estate market, is also as healthy as I have ever seen in a long, 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 long time. In fact, I have never seen a healthy one, ever. I wasn't there in the mid-Qing dynasty. Maybe that was the last time that they were healthy. I don't know, Mark. It's just always terrible. But anyway, that's not your question, so Keith.
So it's been interesting to hear your thinking, and obviously you're not a short-termist in terms of putting together your ideas about the real estate market in particular. But I'm curious as to what factors you really use when you're making your judgment calls or your investments. Are you looking at statistics and data that you pull from Hong Kong and the mainland? Are you walking around and seeing what's out there? How do you put together your view of a healthy market, so to speak?
The way we do it, and so far it has worked for us well, is obviously you have to look at the statistics. You've got to have some objective facts, right? So that you always look at. But if anybody who just look at that and make decisions, then I'm sorry to say the next sentence. How does it differ me as a real estate developer from a journalist? You look at objective statistics, and if that's all I look at, then I'm not a professional real estate guy, right? I may be a terrible journalist, that's all. And so we always feel and sense and touch. That is indispensable. To me, real estate is very much of an experienced, intense industry. You got to have a feel for where things are. And the last 20-some years, I think Hang Lung has called the market, both in Hong Kong and in the mainland, probably as good as most people. Some even say that we're among the best. So we do okay. But we do use our intuition, our senses, our feel, in addition to just statistics.
Florence, you have a question.
Thank you. Florence de Changer with Le Monde. Since you like long-term...
Isn't her accent beautiful?
I can make it stronger if you want.
Please don't.
No. Since you like long-term, how do you see 2047 coming? Because I understand many of the real estate leases are based on 30 years. We're getting there. The Communist Party, the communism in theory doesn't marry very well with private property. So how do you see this coming?
I answered, Florence, your question in a slightly unconventional way. That is, before you worry about 2047, how about the leases in mainland China? They are 30, 40, 50 year. Residential is 70. But a lot of, the so-called comprehensive development is 40 years. And a lot of them were purchased 20 years ago. The first time Hang Lung buy a property in mainland China was December 1992. That's 22 years ago. 23 years ago. So, how many years left? In those days it was 50 years. So it's only 20-some years left. And the mainland Chinese have chosen not to announce how they're going to renew leases, right? Yeah. And about 7-8 years ago, the government in Beijing was obviously studying this issue. So I've been invited to go to Beijing to talk to them. They have come to Hong Kong and asked me to organize small meetings with leading real estate people. So oftentimes we meet in my office, where Keith, you have been there for many times for lunches. And he still write bad things about me. No, I'm kidding. And so they know all the arguments. And yet, to my surprise, they have chosen not to do anything about it. Now, why then is the market not reflecting and say, wow, you only have 25 years left, so the value should be diminishing, right? It's not. If it is diminishing, it's not because of that issue. And I think that it's because most people accept the fact that what is the best way to create, what is the best way to get rid of the Communist Party? To not renew those residential land leases, right? You're going to have a social unrest overnight. Are they that stupid? I suspect not, right? So they, and you know, I told them, this is 7, 8 years ago, I said, go to Irvine Company, 55-year leases. Go to Crown Property of Thailand, it's 30 years, right? Go to the Hong Kong government. Used to be 999, and then it was 99, and it was 50, right? So we have, the world has discovered how to manage the renewal of land leases in a way that is reasonable. The government gets something, but it doesn't create social issues. And so everybody is assuming that the Chinese government would not be so stupid as to destroy their own residential real estate, and in the process destroy the confidence of the middle class. And so I think that I'm still trusting that they will not do foolish things. And I'm pretty comfortable about that. And that's why I'm still buying land at 40 to 50-year leases, right? And come back to Hong Kong. You know, Hong Kong has been, 18 years since 1997? So another 32 years to go, right? God knows what will happen next year. And the world is changing so fast. China is changing so fast. In 32 years, I really don't know what. I told my son one night, when his father and son, we were, sharing a hotel room in mainland China. He works for me now. And I said, son, I really don't envy you. I think you live in a world that is going to be so damn tough. My generation is the best, the most selfish, but the most lucky. And your generation is tough. I gave a talk one time in Chicago, University of Chicago, on 8 ways to destroy the world. And I said, son, you will see all that happen. What I don't know is which one will destroy us first, right? So, 32 years is a long time still, Florence. And I don't think.
But you like long term.
Yeah, but I just don't know where China will be in 5 years, let alone 32 years. And what I do know is the following. I think China will be moving still in the favorable direction in the foreseeable future. There are black swan events. There are, possibilities. But if you were to just look at the possibilities, the black swan events, you never do anything in life, right? So I think that I'll give you an example. 3 or 4 years ago, I gave a talk at the Public Library of New York, and at that time I was really, really worried about mainland China. And they say, my audience said, what do you worry about? I said, I think there will be a social unrest because it's so crazily corrupt. And relatives of mine, friends of mine in mainland China, who are totally apolitical for decades that I know them, suddenly are now cussing and cursing about the corruption in China. This is about maybe 4 years ago. And I was really worried. Today, I'm a lot more sanguine because I think the present government has done the right thing in dealing with corruption. I know that there's a lot of questions you can ask, all the detail, what do I know, right? Your guess is as good as mine. When would they stop? When would they start? And this and that. I think that at least it's in the right direction. And when you look at the long term, the most important thing is you get the overall direction more or less correct. You don't have to be that smart. If you want to make short-term predictions, then you really have to be smart. I know I'm not smart ever since I was a kid. So I decided to go for the long term, and then By the way, if I'm wrong, nobody will remember anyway. But I do write a chairman's letter every 6 months, and people do call me to carpet if I'm wrong. But so far, so good.
We have just a few minutes left, so questions from the audience. We will send a microphone around. We will start over here and work our way over. Gives Ronnie a chance to take a sip of wine before the first question. Right over
Good
here.
wine, by the way, ladies and gentlemen. I didn't know the journalist.
Yeah, hi, thank you. That was excellent. Thank you very much. Just one quick thing. The monetary base of the Federal Reserve shrank by 5% with a 25 basis point increase. So we've had a violent shrinkage in the Federal Reserve balance sheet. So this is
I don't know,
something
but
we
talk
can't
about
ignore.
U.S. or China.
Well, the monetary base is going to affect any country that has a dollar-linked
So you're
currency.
talking about the U.S. Federal
It's
Reserve.
undeniable, undeniable.
Yeah.
Here's my question. I don't believe in short-term stock price movements. I do believe very much in the long term, the stock market is right. Today, your stock broke through its old 2008 low in the height of the crisis, and it's at a 12-year low. So what does your stock price know that you don't?
Well, I tell people that I was just with a whole bunch of friends yesterday in Beijing, and I was saying, I calculated for the first time. I said, wow, we lost $100 billion. 100 billion Hong Kong dollars in value in the last 5 years in market cap. And that's a lot of money. And so what do you tell shareholders? Let me tell you what I tell shareholders. Number one, China is out of favor. Number two, retail is terrible. And number three, high-end retail that we specialize in is especially badly hit. So we got a triple whammy. And no wonder smart investors respond and react to all those factors. But I also remind people that for the last 9 years, I have had zero debt, zero net debt. And so when you have zero net debt, what the heck? I love the bear. My nickname, at least in the Chinese, is 擁抱個熊市叫咩啊？ the bear huggers. I'm the bear hugger. I love the bear. So because it's going to hurt my competitor a lot more than it will hurt me. I have zero debt, so the banks are not going to go after me, right? And so in due course, I'll buy. Why not? As long as I don't see China going down in a systemic way, if it is just cyclical, it's okay. Now, this happened to be something that is so severe, and it's not just China, it's global. China plays a big part in it, of course, that it's hard to say whether it's cyclical or it is systemic. In fact, that is one thing that I've been struggling as I am writing these few weeks, my next letter to shareholders. How do I define it? Is it cyclical? Is it systemic? When it's so severe systemically, it borders on systemic, right? And so in time, as long as I see that China market is not going to be down for the next 5 years, that's fine. In fact, if it is down 5 years, I'll just sit tight and wait for another 3 and I'll start buying.
We have a question right over here.
Thank you, Ronnie, and Happy New Year to you.
Hey, Happy New Year.
As an investor in morning,
正常啊?
Jackie Ouyang.
Hi.
Hi, how are you?
I saw your wife came to our Asia Society program. I don't see you. No.
So, you know, we invested in bonding side. You've made some great investments in China in other areas as well as in real estate, of course. So my question here is that, okay, the title today is about the property boom, but there's obviously no boom in the property stocks. And there's no boom in the business conditions in the way that your 82% margin is not coming back in a hurry. So what's the next opportunity you see for your business? And Hang Lung Property is only a subsidiary of Hang Lung Group. What's the opportunity you see that will, bring outsized return, that will bring the boom back in the stock price that the gentleman is, complaining about? So
I'm not smart enough to figure out what will the cause be. All I know is history tells me that everything that goes everything that goes up comes down, and everything that goes down may go up. Right? So I have to decide whether it's systemic and versus cyclical. It's not just terminology. It influences my strategy, right? When do I begin to look at that market seriously? And I'm in no great hurry to look right now. I'm just doing a lot of internal house improvement kind of a thing, management team, corporate culture, and all that kind of stuff, and just buy time. And when the time comes, as long as I decide at that time that the market may recover in the next 2 years or whatever, you'll see me in the market. I'll be buying.
What about other areas apart from like local real estate? As I mentioned, Hang Seng Properties versus Hang Seng Group. Is the group looking at other opportunities, or?
Well, as you well said at the beginning, that Hang Lung doesn't do anything that is other than real estate. So everything that's outside of real estate is in the family company Morningside, right? And Morningside has always, as you also rightly say, invested in high tech, for the last 50 years. People just don't know about it. That's all. So we do those two things. Now, in Morningside, let me tell you something. I used to have more factories in China than I have real estate projects in China. Most people don't know that. I'm speaking not for Hang Lung, I'm speaking about Ronnie Chen. Huh? And eventually, we sold out everything. By the way, I sold Europe, I sold Asia. I only kept two places, United States and China. The biggest market that is, relatively speaking, the safest, America, and China, the fastest growing emerging market, right? And so I have no interest to wander out of those two places, although historically I was stupid, and when I was younger, I used to be in 18 countries around the world, and I have no intention to return to any of those markets. And so you will see me meaning Morningside and Hang Lung, only in Hong Kong for Hang Lung and mainland real estate, and then US and China, mostly in technology investments for Morningside.
We have time for just two more questions. We'll start here and then go here. Right here.
Hello, Ronnie. It's Sarah Monks,
Hi, Sarah.
member of this club. What do you see as the potential impact on both the Hong Kong property market and land supply of the government's potential outstanding commitments under the small house policy in the new territories? How do you think this policy can be fixed? And do you believe that C.Y. Leung, in a potential second term, is the person to fix it?
The small house, yeah,
The
building smaller
dings, yeah.
Yeah. The dings.
The government's potential outstanding commitments
for the
under the
ding-
small
the-
house
for
policy
the new
and its
territories.
impact on land supply in Hong Kong, and how can it be fixed and who can fix it?
I don't know. Hang Lung, by the way, never invested in the new territories. We've only done 1 or 2 projects in the last 50 years in the new territory. It was a mistake. Before 1997, it was definitely a mistake. But then today, I'm not too, worried about it, because I deem the risk in investment property development and ownership in the mainland of China on a risk-reward basis is as attractive, if not more, than residential in Hong Kong in general. I know a lot of people disagree with me. As the Chinese say, there are many ways that leads to Rome, and we only have one way, and we may not even have the best way, but it's one way that we know how, we know well, and so we're sticking to it. In Hong Kong, I know those obligations, whether they will fudge their way through over a longer period of time, or would they frontally face it, I don't know. I suppose it depends also on how people in Hong Kong react to that kind of stuff. But I am not negative about Hong Kong residential at all. I'm just too much of a bear hugger that I don't buy unless I see great opportunities. I'm a follower of J.P. Morgan that says that unless there's blood on the street, don't bother, right? But when there's blood on the street, do buy. And I just don't see blood on the street in Hong Kong in a long, 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 long time. It may go up and down a little. And by the way, when real estate prices in the U.S. move 10%, it's a lot, because the mortgages is usually it's usually 80-90% at the least. Over here, it's much more like 60-70%. And so the market moved 20-25%, is more or less like moving 5, 6, 7% in America. And so, I don't overreact when the market go up 10, 15% in Hong Kong. That's fine. It's the nature of the market.
We have time for just one more question here.
Time flies.
When you're having fun.
I'm Janice Yelgarten. I'm a lawyer at DLA Piper.
You're a lawyer?
Yes.
Oh, no.
I specialize in real estate investments in all over, inward, outbound, and inbound. I noticed that you have very carefully caveated all of your positive responses to being applicable only to residential properties. If we swap that out and apply it to commercial, is your outlook just as rosy?
Okay. I mention residential because that is a much bigger market, and that is what most people are concerned with. Let me address something that is embedded in your question, I assume, although you didn't enunciate it, and that is, hey, there's a lot of shopping centers in mainland China. So you are in the shopping center business in mainland China. Are you worried? My answer is the following. I said, there's not a whole lot of shopping centers in China that are good. There's a lot of crap out there. 99% of them are just nothing more than crap. Who can build good quality shopping centers in mainland China? I can name you several companies. All but one or two are Hong Kong companies. So we all know them. And so there may be probably no more than 5 or 6 companies that really can do decent shopping centers in the whole of China that I know of. And you have a country of 1.37 billion people. You have how many cities that has a million people or more? 200, right? And then you have something like 90 cities that have 3 million or more, and 60, 70 cities that are 5 million or more. And you divide 5 or 6 of us into that kind of a market. We are nothing. And as I always say, for those of you who don't know, any of you know who Fan Bingbing is if you're not a Chinese? Fan Bingbing is supposedly, I don't know what she looked like, but anyway, she's supposed to be a very pretty actress. And I say, if you're Fan Bingbing, do you worry not having a boyfriend? Or if I'm Tom Cruise or whoever, I don't know who's handsome now. Anyway, Brad Pitt, if I'm Brad Pitt, right? Would I worry not having a girlfriend? So, will 1,000 Ronnie Chan threaten one Brad Pitt? The answer is no. Right? So you got a lot of, Ronnie Chans out there in terms of terrible shopping centers, as ugly as Ronnie Chan, short and ugly. Okay? And then you got a Brad Pitt, his name is Hang Long. Right? And there's not a whole lot of them. And so, as is always the case in market economy, over time, the winner will win big. A few winners will win big, whereas 90% of the people will just tend to disappear or living dead. And so I think that in the commercial side of things in mainland China, where I play, I don't like all those crap out there because they do take away footfall. But much of those footfall are not the kind I want anyway. And that's why we only specialize in the 4 to 5 star high-end shopping center. Now you say, hey, that is the hardest hit right now. I know that. Which sector is not hardest hit from time to time? If you have no debt, what do you worry about? Will the Chinese not buy Louis Vuitton and Chanel, in the long run? I suspect there will always be market for that. And so if you are the best in each city, now let me ask you, phrase the question slightly differently. If you are Chanel, how many shopping malls would you seriously consider when you enter into a city? Apart from Shanghai and Beijing, probably no more than 2. And as long as I'm one of the 2, my competition is not the 40 out there. My competition is 0 to 1, right? And so the question is, will there always be a market for Chanel? That is the question. And if the answer is yes, then I'm okay. Now, I may not have the double-digit growth, as somebody mentioned earlier, right? 20% growth every year. But if I'm growing at, 8, 9%, 7, 8, 9%, it's still very decent. And consumer growth in China, slow as it may be, is still at 7, 8%. Although it has come down from 14, I know that. But I think that in the long run, unless you say that the Chinese are Martians, which they are not, Martians, I understand, don't buy Chanel. But as long as you are human beings, especially Asians, look at our Japanese friends, our Korean friends, our Taiwan friends, our Singapore friends, our Thai friends, our Hong Kong friends, right? There will always be a market for the high-end stuff. And if there's only, no more than 1 or 2 in the whole city, and I'm one of the 1 or 2, I'm fine. So I'm relatively sanguine about it. There's a lot of, e-commerce. I could go into a lot of that. I wrote about it in the last couple of years in my chairman's letter. So you're welcome to just go take a look.
So to summarize, still very rosy for Hang Lung, not so great for everybody else in the commercial space.
Yeah, if you're a Brad Pitt, you're okay.
So on that note, Ronnie, there are many more questions and themes to ask, but we've come on to 2 o'clock, which is when we end our events. Thank you very much for being with us today. And to say thank you, a small present, a small gift from the FCC. I hope you wear it at the Asia Society as well.
Thank you.